Well, we are always looking for positive news on the economy. And today, maybe we can deliver because the monthly inflation rate for June declined slightly, which could give way for the Federal Reserve to possibly lower interest rates by the end of the year.
Yes. According to fresh data released this morning, inflation decreased 1.1% last month. We'll take it, or I should say 0.1%. That put the rate over the past year at 3%. That is slightly lower than economists predicted.
For more on what this means for the economy, CBS News contributor Javier E joins us now. Javier, tell us, sometimes, Errol and I are looking for even those tiniest numbers. Are we reading too much into this, or does this actually indicate a good trajectory for the economy?
Yeah, this report is an unequivocally good news story, finally, and it kind of suggests that investors expect to be kind of dancing in September when the Fed finally meets in the fall and finally, hopefully, cuts rates. And yes, in case you were wondering, that indeed was an Earth, Wind, and Fire reference. So
I caught it. And so how are markets responding to this hint of rate hikes perhaps not kicking up anymore and perhaps coming down sometime?
Yeah, markets are kind of all over the place today, as they're kind of want to do when investors kind of get good news that they don't quite know what to do with or that they've been expecting. We got a little bit of slippage in tech stocks in the S&P 500, but both of them are parked near record highs. So the trend is decidedly higher, even though today we're getting a little bit of profit taking and people are just kind of wondering what the next move is. But the trend is decidedly higher, and earnings season is here and earnings are poised to look good. So they'll kick off this week, and we expect, the trend to sort of remain our friend.
Javier, because sometimes it gets a little confusing for people when we're talking about inflation rate, the cost of inflation, prices. Spell out really how all of these things are different, but obviously interconnected.
Yeah, I mean, look, we want to see the ideal scenario would be sort of prices falling. And I always say prices are falling is deflation, which is also bad. But what we're seeing here is just the rate of inflation rising at a rate that is measurable or just manageable, really. And if you think of it this way, the data came in at 3% last month. What we saw 2 years ago or so, May 22, the spike high was 9.1%. So we've come off almost 6 full percentage points. That 9.1% was the highest we had ever seen since May of 1981. So you have to think of it in terms of inflation is still rising, but it's at a much more manageable pace. One of the things, it's not just inflation data, but also pay attention to some of the labor data. One of the things that the Fed watches is how much people are earning. The unemployment rate ticked up last month slightly, but average hourly earnings rose at 3.9% year over year. That's at a better than the rate of inflation, but it's actually the slowest pace in about 3 years. So people are earning more, but they're earning at a slower pace. Prices are still rising, but they're doing so at a moderate. And also, it's good to note that household staples, stuff that we really use every day, food, gas, when you're signing a new rent lease, those have come off substantially. And so that's part of why this is a really good news story.
All right, Javier, thank you so much.
Thanks, Javier.
Absolutely.